A lot of the people who say that Bitcoin is a scam and they don't trust Bitcoin, a lot of the people that say those things, I've noticed, don't really understand the world of macro and how money flows. Bitcoin was created to basically be an antidote to that liquidity and government money printing. The dollar is one of the biggest contributors to financial conditions. And again, what happened is, all right, what is up, guys? We are here, and this is the first episode of Money, Markets, and Mayhem. So this is an aptly named podcast to basically take you through in real time some of the things that are happening in relation to markets, macro markets, and the mayhem that is macro markets. For those of you who have traded macro markets or have been in and around trading, you would know that mayhem is probably the best word to describe what goes on. And I hope over time, as I get better at this delivery method, that I can kind of educate and entertain in relation to how the money flows and how markets work. So I'm going to give it my best shot. Bear with me. I'm going to enjoy reading all your feedback in the comments, and I'm looking to basically improve each and every episode that we put out. So yeah, I'm glad to be with you here today, and I'm going to jump straight into it and just give everyone a bit of a look at the things that I'm paying attention to at the moment. So I'm going to start off with something that I posted recently on my Instagram. So you can see there, my Instagram handle is @MarkDePaola, and I just put high level stuff on that. And if you want to follow me on X, that is where I'm posting more regular macro updates, reposting things that I'm seeing from other gurus in this macro industry. I feel like one of my strengths is being able to discern who the best macro people to follow are. And I think that's what's made me reluctant wanting to do this podcast for so long. How the hell can I get on camera and try and go head to head with these people that I think are just like so high level? And then it kind of dawned on me with the questions that I was getting is, maybe I don't have to pitch myself at that level. Maybe there's a lot of people out there who are just trying to get started and want to know where to start, right? Because it can be very overwhelming and daunting. And maybe there are people who have never even considered being interested in macro in the first place, and they want to kind of check it out and see what it is. So I thought, you know what? Let's stop trying to compare yourself to these macro masters of the universe, and let's just try and give as much value as possible each and every week. So that's what I'm here, and that's what I'm going to do. The first screen that I'm sharing is basically Dad's Bitcoin update. For those who follow me on Instagram, I was about half a Bitcoin allocated. And recently, I think it was on Friday, I allocated the rest of the funds that initially I was going to stagger over different entries as the price went lower. But I decided to allocate the whole balance, which was basically half of the cash that we had to allocate. And I went all in on the Bitcoin. So I'm fully allocated. I'm going to try to explain why I did that. Just for full disclosure as well, all these purchases have happened over the period of the last month or so, and we're about 0.5% up, right? We actually purchased much lower than the Bitcoin price now, but because we purchased in an Aussie exchange, CoinSpot, and because the Aussie dollar has dropped over the last month, our account balance has actually come down, even though we purchased Bitcoin at a lower price, right? So that's one thing that everyone needs to take into consideration. If you're buying Bitcoin on an Aussie exchange, that you basically, when you sell into AUD, right? So the currency changes do affect the profit or loss of your trades, right? So that's an interesting thing. I've got a couple of family members at the moment that are following along and are trying to allocate some of their super money to Bitcoin. And I've been trying to guide them on entry levels and things like that. By the way, everything that is discussed in this podcast is not financial advice. I'm hoping to just guide you through the things that I'm doing. It's purely for entertainment and educational purposes. Please consult a better, more profound, well-known and well-respected guru than me before you invest a single dollar in these crazy freaking markets, okay? Okay, so now that we've got that out of the way. So I've been guiding some of my family members along on where to set bids and where to start accumulating Bitcoin. Recently, when I told my brother-in-law, who's also allocating, hey, I've just gone all in on the balance of Dad's Bitcoin, he said, why have you done that? What's the reason that you did that? And at first, I'm like, well, I couldn't give him a straight answer. It was like I'd started to get the feeling, my spidey senses started to tell me that perhaps we've reached a bottom. And Bitcoin and macro. A lot of the people who say that Bitcoin is a scam and they don't trust Bitcoin and it's not worth anything, it's not backed by anything. A lot of the people that say those things, I've noticed, don't really understand the world of macro and how money flows. I was speaking to a friend who's like options expert, understands markets, and he's always having a go at me because I'm so bullish on Bitcoin. And I basically said to him, dude, I think one of the reasons that you don't understand Bitcoin is because you don't understand how bonds work. US Treasury bonds, Chinese Treasury bonds, Europe Treasury bonds. Basically the money that people lend governments in order for governments to fund their deficits or their budgets or their citizens' needs, right? Once you understand how bonds work, you kind of understand the need for Bitcoin and why it was created. Now, the very best book that I have found that explains the need for Bitcoin without actually discussing Bitcoin until the very last chapter, because all it does is talk about the history of money and governments lending and borrowing money. It's called Broken Money. It's by Lynn Alden. If you read that, you will get a masterclass better than any MBA or university degree you could possibly imagine on the need for Bitcoin and why we've arrived at the place that we've currently arrived at, where Bitcoin has gone from zero, $200, $1,000 to now not $84,000 and it reached a high of around about 110. No one would have, well, some people did imagine it to get here, but I doubt that there were that many people that had the conviction to really put a lot of money behind it. And those who did were really rewarded. And, you know, there is a huge case to be made that there's still so much room for it to grow. So anyway, Broken Money, go out, get the book. It's on audio or you can buy it on Amazon. Read it. It's by Lynn Alden. Follow Lynn Alden on X, Lynn Alden Contact. She's even got a subscription. It's very affordable if you want to read her monthly thoughts. These are the kind of people that I'm learning off. These are the kind of people that since 2019 through 2020, I've started to learn from and understand and shortcut my understanding of markets through basically piggybacking off their frameworks. So yeah, Lynn Alden, I'm always going to be throwing in people to go out and follow. And Lynn Alden is definitely one to follow. That is a great explanation of the need for Bitcoin arising from a basic macro need, a high-level macro need. So you can't separate the two. Bitcoin macro, you can't separate them. It's not. Forget about crypto. Just think about macro and the reason the Bitcoin was created. There's another book by Saifedean Anamous, I think that's how you pronounce it, called The Bitcoin Standard. I haven't read it yet, but one of my colleagues, Adam Hudson on the Unemployable podcasts, speaks really, really highly about that book. And there's also another episode that was just aired on the Unemployable Media channel, which was with Larry Lepard and Adam Hudson. And Larry's got a book called The Big Print, which also outlines the need or why Bitcoin was created. And those boys actually did like an hour 15 podcast as well. It's so easy to understand. And I've got people that have basically listened to that podcast, weren't listening when I said, hey, buy Bitcoin 4 or 5 years ago. They listened to that podcast and they go, now I understand why I've got to do it. So there's a few more resources for you guys always as well. All right. So back to my brother-in-law and why did I invest more money in, or the rest of Dad's money in Bitcoin? Well, there was a couple of reasons. There was a couple of other reasons, more technical reasons that I thought now might be the time. Let's go to the Bitcoin chart for a minute. What I use to look up my charts is TradingView. So you can get a relatively affordable subscription to TradingView. I use TradingView. I use all different time frames. You won't find all these dots and colors and special lines on the standard TradingView screen, but I've got a bunch of different scripts that I have work over the top of my TradingView screens, and they tell me certain things. I'm not going to go into them in this episode. Maybe in a future episode I can go into like what all these things mean, but very, very high level. This pattern here, you can see in here that it's like a little bottom was made here and then a little bottom was made here. There's a thing in charting called a double bottom, and when you see this pattern, sometimes what that can signal is a launch pad for future gains. So if you look back here in January, there was a bottom made here, and then there was another bottom made here, and then the price took off. Here, you could argue that it didn't really come down all the way. Like it retraced a lot deeper, so you wouldn't really call that a bottom, a double bottom. Here is another example, bottom, and then the price takes off. So there's an argument to be made that here and here is what we call a double bottom. And so that the bottom is in and it might retrace, but it's unlikely to make brand new lows. Now, that could be wrong. We could get Trump escalate tariffs. We could get the bond market dysfunction and a bunch of hedge funds blow up and everybody has to kind of sell all assets to meet margin calls. But there is an argument to be made that there could be a double bottom made here. And this chart pattern suggests that we're trying to base and come out of that. So that's one more reason I decided to go all in and not wait any longer. And then there's one more that I'll show you. And then here is another chart or technical analyst that I follow. His name's Peter Brandt, and you can find him on X as well. I'm actually subscribed to his free Discord channel as well, where they produce tons. Now, this guy is like been around for, I think he's something like 75 years old. So he's been trading for like 45 years. And he's as good as they come. He doesn't brag about his positions. He's not out there trying to sell courses and things like that. I think he does have a paid subscription. He's real down to earth and real cool. And he goes both ways. He's not like an always bull or an always bear. He'll go the way that the charts are confirming. And he's basically making the case that you had this downward trend, and that's called a bearish flag or a bear pennant. When that range breaks, there's always like a retest, and then there's a bounce off. If you take this line and put it across that previous, because what happens here is it's called consolidation. You've got, after a major run-up, you've got some people buying, some people selling. You've got the people that are late to the market trying to get in, and you've got the people that rode this price action up that are trying to distribute their tokens out and take some profit. Why these chart patterns can be valuable is because they basically show the fractal of human nature, accumulation and distribution. And you guys, any terms that you hear me speaking about on these pods, throw them, like press pause, throw them into ChatGPT and ask ChatGPT to give you a rundown, you're 5 years old, of what those terms mean. That is how I've been educating myself when I watch these gurus speaking on their podcasts as well. And so you have this accumulation and distribution. So distribution, accumulation, distribution, accumulation, distribution, accumulation. And then it breaks the trend and it goes up. Now, there's an argument to be made that we've been in this downtrend. And this section here is a key level. So before we spoke about double bottom, and that is that section just in here. And the argument, Bitcoin poised to flash re-entry buy signal for me, is he's making the case that we might have bottomed, or the price action is trying to find a bottom, and this could create a platform for a spring up. Now, where that goes, I don't know. I'm not an experienced enough trader to give you price predictions and things like that, and I'm probably going to avoid doing that anyway, purely because that's not where I want to take this channel initially. I'm just trying to basically educate on some of the things that I think are pretty valuable to understand as a baseline. And so the argument, again, is to be made that this could be forming a bottom and the bounce could be coming. What else is happening? There's another thing that's happening at the moment. Everyone's probably heard about the Trump tariffs, and there's a lot of turmoil and uncertainty in the markets because of those tariffs. You're getting a big stock sell-off. And usually what happens when stocks sell off is US treasuries or government bonds usually rally. So their prices appreciate and the yields come down, the interest rates come down. But recently you've been having stocks sell off and you've been having yields skyrocket up. So the value of the bonds actually depreciating. That's not good. And the reason that that's not good is because you've got so many hedge funds out there that basically own stocks and they own bonds. And some of them own them on like 100x leverage. And when they both come down in tandem, they have to take down that leverage really fast to stop their funds from blowing up. So what you're seeing at the moment is as stocks fall and bonds fall, these hedge funds are trying to get out of both these trades and they're taking their leverage down. What hedge funds do in these situations when their losers are coming down and they've got to take them down is sometimes they sell their winners. So all assets during these environments can sometimes correlate to one and become uniformly come down together. And so there is a chance at the moment that stocks will continue to fall because of the bad macro backdrop and the fears that we might go into a recession. And if bond yields keep rising or bonds keep depreciating, these hedge funds are going to have to keep deleveraging. Now, we don't know. At some point, people might say, well, shit, I'm getting out of bonds. I've got to put that money somewhere. I'm going to put it into Bitcoin, and Bitcoin may diverge. But at the moment, Bitcoin has basically been going down or depreciating with stocks, with bonds. But recently, there's been a lot of talk about the US Treasury market dysfunctioning, a lot of talk about Trump caving because the market is dysfunctioning. And you've been hearing reports from Fed, central bank officials basically saying the Fed is at the ready to add liquidity should the Treasury market dysfunction. Because that's one thing that the US can't allow, is their Treasury market to dysfunction. Because if they do, yields spike up and the interest expense for the US government spikes up. And it's already at about 110 to 115% of their annual receipts. They've got to get that down, because if that was a business, you'd be going broke, losing 15% a year just to be in business. Now, the US is a little bit different. It can print money, etc., but that's not a good position for them to be in. And so at the moment, the backdrop is pretty precarious. Yeah, it's a guessing game at the moment whether Bitcoin diverges and starts becoming and viewed as a safe asset, or whether it continues to come down with all other assets at the moment. But I'm looking, some of the more professional traders out there will tell you, hey, wait for price to confirm that we're out of a bear market, wait for it to confirm that we're back in a bull market, and then start to buy. I guess back to why we started and why I went all in on Dad's Bitcoin allocation is because I'm trying to front run that decision. I'm trying to front run that dysfunction, because when the Fed comes out and says, hey, we have to print more money, we have to backstop the Treasury market, you're going to see gold and you're going to see Bitcoin run, because Bitcoin was created to basically be an antidote to that liquidity and government money printing that you're going to see if the Treasury market dysfunctions. One more thing that I want to share before we wrap this up. I want to keep this one nice and short today. I know that I've probably thrown in so many chunky concepts, and you guys are probably going to need some time to kind of chat GPT some of the definitions. Again, please throw your comments in the comment section. I need as much feedback as possible on how I can make these podcasts more digestible, more understandable, more useful, and add heaps more value. And please give me a subscribe. That's how I know I'm doing a good job, I guess, if people are sticking through to the end and subscribing. So one last chart I'm going to show you. And this is from GMI, Global Macro Investor, who is a paid subscription service that I subscribe to. It's Raul Pal and Julian Bittal. Again, two people that you should be following on X. But basically, when Trump was elected in 2024, you had yields go up and the dollar go up. What happens when yields go up and the dollar goes up is it actually tightens financial conditions. So the white line is Bitcoin. And as yields were basically going up after Trump was elected and the dollar was going up, you had financial conditions tightening. And what happened was Bitcoin was running on the euphoria of Trump getting in, and it was going up into financial conditions tightening. Then what happened is Bitcoin, and what these guys are saying is that Bitcoin lags financial conditions by around about 3 months, right? So some people say 6 weeks, some people say 12 weeks, but let's say 12 to 6 weeks. For the purpose of this chart, they're saying that Bitcoin lags financial conditions by 3 months. So financial conditions are tightening from November to January. Bitcoin is running up, and then into December, after financial conditions have tightened. So Bitcoin peaks and then comes all the way down to the recent lows that you've seen around 76 or 74,000. But what's been happening from Jan, Feb to now to April is the dollar has been coming down in price. And so the dollar is one of the biggest contributors to financial conditions. And so with the dollar coming down in price, financial conditions have been easing. So the last 3 months, financial conditions have been easing, and Bitcoin hasn't responded yet. So if this is accurate and the dollar has come down from like 108, so you can look at the DXY on TradingView. So you go DXY TradingView, you just do it like this, see on super charts. And this is the look in that you get when you don't have all those extra plugins that I've got. If you look at the weekly chart here, it peaked here in December 2024. So financial conditions got to their tightest here in Jan 2024. And Bitcoin then fell on a lag and has dropped. But recently, in the last 3 months, the dollar has fallen all the way down. but Bitcoin hasn't responded yet, as you can see here. So what these guys are predicting is that now that financial conditions have loosened over the last 3 months with the dollar coming down, and again, you can either go into ChatGPT and say, why, you can type it like this: why do financial conditions ease when the DXY goes down? And why do financial conditions tighten when the DXY goes up? And it'll give you a better explanation than what I can do, although I will try and cover it in a future episode. But basically, these guys are saying, hey, we're getting close to a bottom. If not, we've touched a bottom. And we talked about the double bottoms before. Bitcoin should follow financial conditions and have a bit of a run up into summer. And so that is a bit of a rundown on why I've chosen now to basically go all in on Bitcoin with Dad's money. There's other ways, there's other more leveraged and more exciting ways that I'm playing trade. I've got my long-term Bitcoin hodl stack, which I'll never sell. And then I like to trade around these movements with like the IBIT ETF on the US market, or I even trade MicroStrategy, GameStop, or some of the Bitcoin miners, because they give you a little bit of extra leverage. For every time Bitcoin goes up 10%, they go up 30%. That's a little bit more. You've got to be in and out. You've got to be watching it. And maybe I can talk more about why I trade those instruments in future episodes. But for now, let's just stick to the Bitcoin. I hope you guys found this useful. Please share it. Please pass it on. Please give me your comments. And we'll see you in the next episode. I'll try and get these out every Monday or every Sunday. Take it easy, guys.